Thanks a lot for that. Well, Sameer Bhise, the banking research analyst at JM Financial Institutional Securities, is joining in now. Sameer, hi, good morning. All eyes are going to be on the banking sector, right? Given the kind of momentum that this space has seen in the last couple of months and the leadership that it has assumed once again. But you tell us, what are the key highlights of this sector? And between private and PSUs, how are you positioned now? Sameer, I think you're on mute.
Yeah, hi. Sorry.
Yeah, go ahead.
Thank you. Thank you for having me on the show. So I think price action aside, we continue to see slightly challenging environment on the deposit side for the sector as a whole, and it has prolonged for a reasonable bit of time. In that context, I think it is important to see that how revenue growth, that is NII and fees, translates into PPOP growth for most banks. Our view, first half is likely to be largely soft on a PPOP growth perspective. And probably towards the second half of the year, when the high margin base of last year is not there, we should see some bit of respite on a PPOP growth perspective. So if you ask me on the near term, maybe this quarter and the next, you should have some softness in numbers, which is why we remain slightly cautious on the sector as a whole. Large private banks, especially ICICI Axis, relatively better placed with respect to growth as well as margins. HDFC Bank, while the numbers were soft, we think the worst of margins should probably be behind, and it will probably remain range bound in the near term. Overall, I think deposit growth is what we are watching. Also, on the asset quality side, some initial signs of inch up on credit costs for spaces which are now widely known, maybe a bit of microfinance, and as well as some bit of inch up in unsecured. So I think that will effectively drive higher credit costs, lower margins. So the only lever which probably most banks have is towards operating expenses, which were running high for last couple of years. Some moderation there will be utilized to protect the ROA levels. That is how we are seeing the overall space.
Okay. So what is, in terms of the valuations, how are the valuations stacked up now, even if there is some moderation, even if profit growth is slower across the sector, right? Do you think there's enough valuation headroom for stocks to move up in the private sector space?
So in terms of valuation headroom, I think I would agree that valuation downsides are limited given the rest of the market has moved the way it has. So this sector probably stands out where valuations are close to long-term averages. But we are of the view that the valuation is there for the right reasons. You will need respite on the macro front, especially deposit growth, which effectively drives your potential credit growth. And for stocks to re-rate, you will need improvement on that side.
Got it. That's the listing, by the way, for MCure. And I think the listing has happened at about a 30% premium on top of the issue price for 31%. The other one is Bansal Wire, which has also made a debut on the stock exchanges. So two listings today. Bansal Wire is up about 40% on the issue price, and MCure Pharma is up about 34-35% now. And significant volumes, half a million plus shares on Bansal Wire and about 300,000 shares on MCure, which of course was the more high profiles. Both were of course subscribed well. MCure was subscribed some 70 times on an overall basis, and so I mean it's a decent start coming through. Sameer, hi, good morning. Now across your coverage universe, banks, non-banks, etc. By the way, you have a new initiation as well, right? Muthoot Microfinance, where you've sort of initiated coverage with a buy, etc. Give us some ideas, Sameer, around earnings, beyond earnings.
So I think we continue to like ICICI Axis in terms of numbers and valuations where they are stacked. ICICI has been the sector leader so far and should remain the way it is going right now. We are happy to see mid-teens or low-teens kind of PPOP growth for both these names for the full year. which itself puts them in a relatively strong position versus other sectors. Some of the smaller banks, we are still watching the credit quality on how credit costs shape up, as there are initial signs of some bit of inch up in credit costs, and we will see where they settle over the next couple of quarters. But broadly, if one has to ask that when the sector probably goes back to the valuation upsides that they had seen earlier, I think it is still some time away in my view.
Outside of these two names, anything else?
We like SBI too. I think on the PSU banks back, I think so far remains the best play.
Okay, SBI, got it. Now for SBI particularly, right? I mean, it's been almost a 15% gain that SBI has seen in the last 3 to 4 months. In terms of valuations in the PSU banking space, is there a lot of legroom for SBI compared to its peers?
So I think one has to look at it in the perspective that ROA has been expanding. And even if one were to adjust for the recoveries and write backs that they have seen from past book, the core ROA is also inching up. So to that extent, SBI now suddenly has a growth upside vis-a-vis what is happening in private sector banks. So they can continue to grow at 15-16% and also drive 1% plus ROA, which puts them in a reasonably strong shape. And hence the valuation re-rating can be justified versus what was the recent history.
Okay, Sameer, we'll leave it at that. Thanks a lot for joining in. Appreciate your views on the sector and how to approach it. Well, let's do one thing. Let's take a quick commercial break. On the other side of the break, we'll put focus on the commodity markets. Manisha Gupta is joining in. Stay tuned.